Alright people, so we are all used to the concept of buying low and selling high, but it is kind of difficult to identify in a particular price range which is high and which is low. And you, SMC and ICT refer to the high and low as what? The premium price and the discount price. So in this video, I'll be using the FIB tool to explain to us how to determine when price is in a premium or in a discount. Please stick with me to the end and let's get started. Alright people, so as you can see on my screen, this is the diagram of this is just a diagram to illustrate how the premium and discount works, right? So premium and discount, it's basically based on where you are or where price is actually facing. So if price is going up, right, in an uptrend like so, we should be buying from the lows, right? So we should be selling at a discounted price, like the English discount. When something is in discount, just like the companies, the price is low, right? And if something is at a premium price, then it is expensive. So that time we should be when it's expensive, we should be selling, and when it is low, the price is lower, we should be buying. All right. So for me, for the tool, let's set up the tool. For the tool, which is used from the FIB tool, there's a setup that is a little bit different. If you turn on your FIB, it's going to look something like so, right? But I have set mine to be like this. So to easily set up your FIB, you just have to go to the settings and double click on it. So all of the parameters and the colors that are turned on doesn't matter. You just need only 0 and then 0.1 and then 0.5. Those are the things you need. So 0.5 for the half, and then the 0 for the beginning, right? And then 1 for the last. Okay, so we have to turn off 0.3, 0.06, turn off everything, uncheck every other box there until it's left with 1 and 0.5 and then 0. So we just have it two section. The first section, which is going to be the upside or the green side. So my 0.5 is the middle, right? The middle line is 0.5. Then we have this, the 1, which is here, right? Then we have 0, which is at the top, which is the beginning. Okay, so how you draw this tool depends on which of the trend you are on. If you are drawing for an uptrend, trying to know where price should pull back to be the discount, you should draw from the beginning of that push. All right, the beginning of the push to the ending of that rally, when before price started to pull back. All right, so when you draw from the beginning to the end, the 1 will be there at the beginning, then the 0 will be at the top, right? So the top side, since an uptrend, is going to be the premium. The downside is going to be the discount. We look for price to pull back to the discount, then we can look for continuation signals or buy confluences. Whatever happens when price is still at the premium price in an uptrend, it means that it's going. When we talk about 50-50 decisional POIs. Whatever confluence, whatever PDRAs you find on the on the premium when you are in an uptrend, they are all decisional POIs. They are not really going to hold price. But when price rally down to the discount when you're in an uptrend, whatever you see there, they have more probabilities of playing out. They have high probability of playing out because price has rallied down half of the push or half of the price range or the impulsive phase, whatever you call it. So price have rallied down half of that, collected all of the liquidities. If you watch subsequent videos, you remember all of the stuff that are supposed to be met before a pullback is relevant, right? But this one, sometimes you can find multiple of those things that are supposed to help a pullback to be relevant. This particular premium and discount is just to tell you if you find all of those other confluences in a discount place, so in the premium ends when you are looking at the bullish move, you should avoid them and you should pay more attention to those ones that are what in the discounted ends. Flip of the coin for the downtrend, because the downtrend, our price range or the main impulses are to the downside. So you have to draw from the upside to the downside, right? From the up push, from the swing lower high to the lower low. Okay, from there like so to this place. So the 0 is always going to be the last ends, and then the place you start drawing from is going to be the 1, right? So for this side, the color doesn't matter. The one that is up is always a premium, and then the one that is down is a discount. All right. So for our downtrend, we have to be what? Buying from where? We have to be selling from a premium price on a higher price. Okay. So when price pushes back to our ash, you know, the ash section, which is always the place we look to execute trade from. When price pushes to that level, you should be looking to buy or execute from there or join the market from there. So for a downtrend, any PDRA that falls or any confluence or any point of interest that falls within the green end, it doesn't. It's just a 50-50%. If it falls above, let's say it didn't get to 0.5 mark and then just around here, it's going to be like it's trying to create liquidity or just collect liquidity. You have to wait for the pullback to go to the premium end before you look to join the sales, right? So let's draw it practically on this last move. So these are impulse to downside. You can see price went through the half, the 0.5, right? It came into the ash level, meaning it is in a premium level for a downtrend, and we have to be selling from the premium levels, right? So we have to draw from the last swing till the last end before we start having the pullback, right? So when price gets here, it's another, we have to look for our PDRs and POIs to start executing price from there as well. That's how you draw it from top to bottom for a downtrend. And then for a downtrend, it's from bottom to top. Sorry, for an uptrend, it's from bottom to top, like from bottom to top like so. So price will get here and you can see we had the push. So let's hop on the chart. Let's go on the chart practically so we can get to see how this has been effective so far, right? So this is USD card, right? Let's look at the last price actions. So this USD card, right? Let's look at last price actions that have happened. Okay. So you can see we were in a downtrend, all right? We had a break of structure like so. Price came down, right? Close below the previous swing, and before that, it collected internal liquidity here. So it is a confirmed break of structure. So having a break of structure right there, what we have to do next is what look for our point of interest for price to move back to, then we can join the sell again, right? And just like I said, we have multiple POIs everywhere, and then sometimes we don't know which one is high probable, which one is not high probable, right? For those of us that follow the strategy, you know that this is our inducement, and after price took the inducement, you can see the reaction as if it's going to come down. But if you use the premium and discount to, you're going to know that yeah, this one is going to actually work. This one is not just a reaction, but it's going to be high probability to play out, right? So this is the push downward till this level. So if we're not going to draw it just like we drew on a downtrend, we're going to draw from the peak of it till the lowest low, right? Which is that level there. So you can see that all of this our inducement falls where in the discounted price range. It falls in the discounted price range, and this is a downtrend. We cannot be selling from a lower price or a discounted price from our price range. So it fell at a discounted price, though it reacted because definitely people are there to always put money there. But you can see that it went straight deep into our premium level before it had a significant drop. All right. So because here is also a PDI for people to execute, people will definitely put money on the line, right? But if you understand the discount and the premium, you know how to use this tool to save you a lot of time, not to waste your time in this manipulation or sorry in this little reaction, but capitalize on the what the significant move. So also this is another push. You can see after this is the one that dropped, right? It has another break of structure here. So from the highest level of that move to the last level before it starts to give us a significant pullback. Here's our discount price. This is our discount price here. We're in a downtrend, so we cannot be selling from a discounted price. We should be selling from what a premium price in a downtrend. So that's why we have our POI, which is here, our order flow. This is a high probable one because it is in a premium level, and also we have liquidity lined up here like so. The liquidity lined up here like so. This general liquidity, right? So when price gets here, it's also likely to do what to take the liquidity and find its way to continue the trend. But from here now, we know that those of us that do counter trading, we know that from here we will be looking to buy till we get to our POI. So this is a downtrend and high probability level for it to continue the trend or continue selling is when price pulls to this level, to our premium level because we are selling. We have to go to the high levels, then we can now look for sales. So whatever happens here, whatever thing we have here, we count them as what liquidity levels because it is all in a discount level and then we are in a downtrend. Okay, so look at one more example from GPUSD. So guys, this is GPUSD and this is the 1 hour time frame. Just like I explained earlier from USD card. The flip of the coin is for the uptrend. So this is the downtrend. I have a break of towards the downside. price gave us this reaction, but none of them actually worked. So if you want to draw the two, we have to draw it from the top, right? The top till draw it from the top till the lowest low before we had a significant pullback, right? So this is the lowest. All of this were pullback. So if we were like on the live chart and drawing it, you drop it here. Price doesn't go to the discount. You have to keep evolving as price pullback. Keep evolving until we evolve to the one that actually have a good pullback. So you can see all of these pullbacks were still at the what discount price, and this is a downtrend. We cannot be selling from a lower price, right? So price doesn't really play out from a lower price in a downtrend. So all of these places are discounted prices. All of these guys from the half to here, they are discounted price. That's why you see when price came, it only gave a reaction, and after that, it still went back into the premium. Find something to mitigate. This is another flow here. Mitigate another flow here before dropping down, right? So you have to, if you practice this to go back in time, back test it, get to see how effective it is and how it works in the market. Each time you have a particular trend, make sure that price is pulling back to the one it's supposed to pull back to on that particular trend. If you're in a downtrend, price will pull back to a premium price or a premium price range, which is from the 50 above to from the 0.5 to 0. If you're in a downtrend, price will pull back to that level, at least the 0.5 before you can make use of any other PDRA or any other point of interest you have that price are given to you. If you are in an uptrend, make sure that price pull back to the discount level before you take advantage of any point of interest that price has given to you. So guys, I hope this was helpful. Please don't forget to like and subscribe to our channel if you enjoyed the video. Please don't forget to say your comment in the comment section if you have something to say. Thanks for watching and stay high.